If I told you that most South Africans overpay when buying a car, sometimes tens of thousands of rands. Whether you are thinking of buying, leasing, or financing your next ride, I'm going to show you how to make the smartest choice and avoid those costly dealership traps. Stick around because this could save you a fortune. Let's dive in. First things first, let's quickly break down the main options you have here in South Africa. We all know the big banks like Absa, Standard Bank, and West Bank dominate the car finance market. They offer variety of ways to get behind the wheel, but are they always the best deal? Let's see. 1. Buying outright. You pay the full price in cash and drive away without worrying about monthly payment or interest. This might seem like the best way to go, but not everyone has 500,000 or more lying around. 2. Financing. This is where most South Africans find themselves. You put down a deposit, typically around 10%, and finance the rest. With interest rate currently sitting around 11.75, your monthly payment can quickly add up. 3. Leasing. Now, leasing in South Africa is becoming more popular. You make lower monthly payment, but here's the thing, you never actually own the car. After 3 years, you give it back and start all over. Personal contract purchase, PCP. Dealerships like BM Finance or Toyota Financial Services love to offer this. It feels like a sweet deal. Low payments now, but you either return the car or pay a lump sum at the end. But does it really save you money? Now, let's get into the numbers. I went down to a dealership in Sandton and did the math. Let's use a common choice in South Africa, the Toyota Corolla Cross, priced at around 450,000. We'll compare the cost around 10% deposit and a 3-year term across all 4 options. Buying outright, you pay 450,000 upfront. After 3 years, you could sell it for about 250,000 rand, assuming depreciation. In this case, it costs you 250,000 rand for 3 years of use. 2. Financing. With a deposit of 45,000 rand and a monthly payment of 13,000 at an interest rate of 11.5%, after 3 years, you would have paid 535,000 rand. You can sell this car for 250,000, meaning your cost is about 285,000 rand. Leasing drops your monthly payment to 7,000 rand. Over 3 years, that's about 294,000 rand in total. But remember, you don't own the car. And dealership will charge you an extra if the car isn't returned in great condition or if you exceed the mileage limits. PCP. With a deposit of 45,000 rand and a monthly payment of 8,000 will pay about 288,000 rand over 3 years. If you decide to keep the car, you will need to pay a final amount of 200,000 rand, bringing your total to 488,000. At this point, you'd have been better off financing or leasing. So far, leasing looks cheaper, but let's dive deeper. Now, let me share a quick story. The first time I financed a car, I didn't really run the numbers. I thought I was getting a deal because the dealership threw in free service for a year. But by the time I finished paying off that loan, I realized I could have saved tens of thousands if I'd simply gone for a slightly used car instead. Trust me, it's easy to get caught up in the excitement. And this is where a lot of us get it wrong. Dealerships throw in extras to make the deal look sweet, but you've got to think long term. Always check the total cost and not just the monthly payment. So let's talk psychology for a moment. Do you like the idea of owning your car outright? Having the freedom to drive it across the country, knowing it's all yours? That's the appeal of buying outright or financing. You don't have the worry of monthly payment after the terms end, and you can even sell the car whenever you like. Or maybe you like my wife and that new car smell is your favorite thing about driving. On the flip side, leasing or PCP lets you drive a new car every few years, but you never really own it. If you like upgrading often and want to avoid the hassle of selling a car, this could be for you. Just watch out for those mileage limit and extra charges. So what's the final verdict? If you are planning to keep your car for the long term, buying outright or going the financing route is generally the most cost-effective option. You get the full ownership and the long-term savings add up. If you are about driving a new car every few years and don't mind owning it, leasing might be the best bet. But be careful with those extra fees. And as for PCP, unless you are sure you want to keep the car at the end, it often ends up being the most expensive route. So, whether you are looking to buy, lease or finance, the smartest move is to run your numbers and choose what works for your wallet. My advice, don't let the dealerships make the decisions for you. If you found this breakdown helpful, hit the subscribe button and share with someone about to buy a car. They will thank you later. I'm dedicated to your success. Be a legacy builder, and I will see you in the next video. Peace.